What is the difference between tax liability and taxable income? Imagine you're trying to figure out how much you owe the government in taxes, but first you need to understand what part of your earnings actually counts towards that. That's where the difference between tax liability and taxable income comes into play. Taxable income is the amount of your total income that the IRS considers subject to federal income tax after you subtract allowable deductions. These deductions can include standard deductions, which are fixed amounts, or itemized deductions like mortgage interest, charitable contributions, or state taxes paid. For example, if you earn $50,000 a year and qualify for a $10,000 standard deduction, your taxable income would be $40,000. This is the figure used to calculate your taxes. Tax liability, on the other hand, is the actual amount of tax you owe based on your taxable income. The IRS applies a progressive tax system, which means different portions of your income are taxed at different rates. For instance, the first $10,000 might be taxed at 10%, the next $10,000 at 12%, and so on. Once your tax rates are applied to your taxable income, you get your gross tax liability. But it doesn't stop there. You might qualify for tax credits, like the child tax credit or education credits, which directly reduce the amount of tax you owe. So, after subtracting these credits from your gross tax liability, you arrive at your final tax liability. To put it simply, taxable income is the starting point. It's how much of your earnings are considered taxable after deductions. Tax liability is what you actually pay after applying tax rates and credits. For Asian American taxpayers, understanding this difference helps with planning. If you maximize deductions and credits, you can lower your taxable income and, in turn, reduce your tax liability. For example, claiming education credits or deductions for family expenses can make a big difference. Knowing this also helps when working with tax professionals or filling out your tax forms. It explains why two people with the same total income might owe different amounts of tax because of differences in deductions, credits, or filing status. Remember, taxable income is the amount your income is reduced to after deductions, and tax liability is the final amount of tax you owe based on that taxable income after applying the tax rates and credits. This understanding helps you manage your taxes more effectively and avoid paying more than necessary.